If I had to name the financial talking heads that annoy the out of me the most, it would have to be Grant Cardone is number one for sure, but a close second is Dave Ramsey.
You can just decide today to be hungry. Be hungry, starting right now. Go for it, baby. That's how it's done.
I was watching another one of his videos, and the entire crux of his argument was why we should be investing in mutual funds instead of single stocks. He's a complete idiot. To say that mutual funds are a better investment is absolutely asinine, and I need to explain why he's so wrong. But before I get started, I just want to say this is not financial advice. I'm not recommending any of this stuff to any individual person, but I think it is something that you should consider. And if you're interested in the topic, do some more research, ask the right people. I'm not certified and I'm not a financial advisor, but reach out to someone that is and see if this could be right for you. Or go visit a brokerage company online like TD Ameritrade, Charles Schwab, Fidelity, Robinhood. Any of those ones that you've seen or heard of before, go visit one of them and test drive this idea for yourself. So in case you don't know this, my primary form of investment is single value stocks. I think they're absolutely by far the best investment an individual can make. And it's part of the reason that at 22 years old, I was able to buy my own investment property. Now, Dave Ramsey would say that I'm a fool and I'm an idiot and I can't believe that you would invest in single stocks. You have no diversification. All your money is locked up in one thing and you're just going to lose all your money. And that's exactly what he says in this video.
He basically went to the racetrack and took $280,000 and placed a bet on one horse. And that horse came up lame. That's what this is. That's what you do when you play single stocks. You're asking for trouble. Well, my broker, I don't want to hear about your broker.
Dave Ramsey reads through an article in this video. And the article is about this guy that worked for GE for his entire life and had stock in GE and utilized his stock as his retirement. And then when GE collapsed back in 2008, he lost all of his money. Now, Dave Ramsey uses this as an argument for why mutual funds are way, way, way better than single stocks, because he says this guy invested in one stock and lost all of his money, whereas Dave Ramsey invests in mutual funds and index funds. I would assume index funds because they're lower cost value mutual funds. So Dave Ramsey invests in mutual funds. The argument he's making is that his mutual funds are wildly diverse. They're a part of a whole bunch of different individual stocks, and by that token, when GE collapsed, he lost a little bit of money on it, but the other stocks in his mutual funds performed outstandingly, apparently, and he didn't really end up losing all that much money. But this one individual that was in a single stock lost all of his money, or lost a big portion of his retirement. Now, some of what Ramsey says in this video is accurate, and I have to give it to him. That, stocks can just go to zero, and I don't recommend that you buy one individual stock. So if you're going to invest in individual stocks, I suggest you do diversify. But with that said, individual stocks are nearly identical to a mutual fund. So, for example, you can make your own mutual fund. Instead of investing in a mutual fund, paying fees and brokerage fees and advisory fees and management fees on top of what you're investing, instead of doing that, instead take all of your money and invest with a company like TD Ameritrade or Charles Schwab that offers zero trading fees. And then in addition to that, you can build the exact same mutual fund that you were just about to invest in. Mutual funds have to file what their top holdings are so that you have some idea of what you're investing in. Look those up on a website like Morningstar, right? I can leave a link in the description. Look those up, figure out what that mutual fund that you want to invest in is in, and then take all your money and do individual stocks, but go down the list of individually owned stocks in a mutual fund and just start purchasing them for yourself. You're equally as diversified, and now you're not paying half of the amount of fees in that mutual fund. So in this video, Dave starts talking about how stock trading is basically fishing, and it's about, every time you cast your line, it might be 10 times you cast your line for one time that you catch a fish. I guess this is what he's talking about. Dave Ramsey is a little bit of a crazy old man, so who knows?
Because that's what stock trading is. It's fishing stories. The one time it went up, for the 16 times you lost your butt, because it's too much risk.
He starts talking about how most traders lose, which I think is 100% accurate. Most day traders do lose, but I am investing in single stocks over a long term. So I will buy quality companies, which I'm going to go over in another video, how to spot these quality value single stocks. I invest in quality companies over a long period of time. And by doing that, I've had a ridiculous return. Not only in my own account, but in my friends' accounts as well. And I can throw a couple images on screen here of my own personal account and my rate of returns, as well as a couple of my friends' rate of returns. And as you can see, the returns are absolutely ridiculous. You're not gonna see anywhere near those returns in a mutual fund or in real estate or anywhere else. I know that I'm just, some talking head, but those rates of returns, they speak for themselves. Every time I get somebody into single stock investing, it's worlds better. And I know that a lot of people love like Vanguard as an example of a company. Everyone that I've seen that's in these funds that are in all types of different fund houses, they never make the same return as they could potentially make if they were investing on their own in individual stocks. Additionally, with essentially every single brokerage house cutting their fees down to zero, you can invest by yourself at zero fees almost anywhere in almost any stock. Another argument that I hear a ton about mutual funds versus single stock, I don't feel like putting in the time to learn everything there is to know about stocks, and it's too overly complicated, and my financial advisor tells me that the average person can't really understand these things, and that annoys the ever-loving out of me, because investing in single stocks is one of the easiest things you can do. And you can just build off of mutual funds. You can just take a mutual fund that you seem to like and that you were going to invest in anyway, buy all those same stocks, and if they're dividend reinvesting stocks, that's even better, and then just leave them and let them grow just as you would with a mutual fund. And every now and then, when you have enough money, dump a little bit of money into them and continue to purchase them and leave them alone. If you are truly that lazy and you don't even want to consider any information about an individual stock, or you don't want to look into it, you don't want to learn anything about it, just buy the stocks that a mutual fund buys and sit and wait. Or if you're even too lazy to look up what a mutual fund buys, you're gonna be 99.9% of the time pretty accurate with just picking stuff that you think is generally a pretty good buy, right? So everybody loves Disney. Everybody hears all about how Disney makes a ton of money, right? Buy Disney, right? Or if you're a gamer, you hear that Nvidia makes a ton of chips for a lot of gaming machines and gaming companies. So buy Nvidia, sit on it and wait. Investing really isn't as difficult as everybody wants to seem to make it out to be. Dave Ramsey, as an example, he has a lot of good ideas for people that don't know how to manage their money and people that don't really care about getting the best return or maximizing the amount of money that they're making in a given spot. But in my life, I would like to make money in every single aspect of my life. People need to stop investing based on random people on the internet's recommendations as well. So I know that I'm also making a recommendation and I'm some random person on the internet as well. But with that said, people need to consider their own situation. If you don't have the money to be wasting money on fees, if you're not over 50 and you just want to park your money somewhere that you'll get a guaranteed rate of return, if you're in any position other than that, you should consider buying single stock. All right, that about does it for today's video, guys. If you liked it, please leave a like and a subscribe. And I would also like to know, what type of investing are you guys doing? Please leave it in the comments down below, and I'll see you guys next time.